What's going on, you guys? We have a follow-up video here on another stock that we kind of hinted at in one of our previous videos where we talked about H&R Block. And this is General Mills. So this is a stock that we have been buying into over the past, how long would you say we've been buying into this thing?
Well, let me pull it up.
I want to say it's been months, obviously. So we've been buying into this since March.
March 19th.
So it's been a couple months. I think General Mills right now, it actually had a good day today. I think it was up like 3%.
Yep. Two.
Something,
Yeah.
maybe 2.5. I think it's at $35 a share now. But overall, what's your overall like feel on this company?
I mean, it's one of those staple blue chips, and it's awesome because it's being priced right now to.
This is my new Unite Healthcare.
Yes.
It's my new one.
That's what he says a lot all the time in the mornings. He's like, I am full on UNH in this one.
Yeah.
Which, if you watch the other video, I talked about how I thought that was really cool that he was kind of diverging a little bit in a way that was using my strategy with a different set of intuition.
Hell yeah.
But anyway, I digress. It's a great company that is being priced like it's, being put to sleep.
Right.
It's not, they're having some volume issues right now. It's purely a midterm thing. People are afraid of GLP-1s. Again, not really a big issue. Yeah, sure, people might eat a little bit less, but people still need to eat. And they're also getting out of some food sections. A lot of people don't probably think about General Mills as being a pet food company unless you know a little bit about the investment sphere, or maybe you work with the company or know a little bit about it. But General Mills has a very big presence in the pet food industry. It is their new industry that they're really focusing on growing market share in and purchasing different companies in through mergers and acquisitions, mainly acquisitions. General Mills doesn't need to merge with anybody.
No.
They can just buy them. But,
Facts.
But, there's that. They're spinning off and selling their yogurt business in Brazil. They're getting out of a lot of Brazilian markets for food. They're getting restructured and having a more of an American centralized approach, it seems like, from what I've read. They're still going to be international. They're just kind of cutting some of those low margin areas. That's awesome too. And then the dividend. This is the best part about this stock. It's a very safe dividend. There's no risk of a cut, at least anytime in the future. And they pay 7% when it's under 35 a share. Pretty much the moment it drops under 35, you're sitting at a 7% dividend yield plus. You're getting paid 7% to sit on your butt and wait to make some money.
Right.
On capital appreciation. There's no reason why not to own this stock around 34. Even if it's $34.99, I'd buy it.
Right.
I started buying around 36, 37.
Right.
So right around there. What's really cool too is they still grow the dividend, albeit a little slower than General Mills. Generally speaking, it's around 2%. But when you're getting 7%, I mean, you're really going to complain a whole lot?
No, that's a fat dividend.
Yeah, and it's
high.
A great covered call candidate.
Yeah.
I sold the covered call. Didn't get a huge premium, but I sold the covered call on my shares that I own currently for June 18th, just because their earnings is the week after, and I didn't want to hold it through earnings for very obvious reasons. Look at H&R Block.
Yeah.
Just some of these severely undervalued companies that should be trading higher. Well, maybe, the earnings might be a catalyst.
Yep.
So try to avoid doing that, but nice extra free money while I wait. And even if I get assigned, I'm going to make roughly 30% if I get assigned on my contract by June. If I make 30% in a month on this stock, that's an unheard of thing for a consumer staple to do unless it's a re-rating.
Right.
So, I mean, yeah, albeit if I make nearly 30% on June 18th when the contract expires, I'm not going to complain.
Right.
So...
No, more realistically, this is going to be more of a stable stock that you look for a slow turnaround.
And you hope for a slow turnaround if you're selling calls or whatever.
Right.
Preferably covered calls, not naked calls, but
For sure. And people will bring up that it's sold off for, the past 5 years now. I think its all-time highs were 5 years ago.
Right around COVID, yeah.
Yeah. Again, I think, you touched on the margins, inventory,
Margins are strong, 12%.
Oh, yeah.
Average. That's consistent, 12%.
Yep. I think probably again, just like we've talked about in the old videos, I think it's just because of the market that we're in right now with the AI,
Yep.
kind of like bull run and everything. People just don't feel like investing in consumer staples because that's just. I mean, what's exciting about General Mills? Like when you're just thinking about
Well,
buying in. It's
You know,
like,
I could list a lot of things.
no,
but-
I'm talking
Yeah.
about the average person.
Yeah.
People want to be like, I want to buy the next big thing, and like I want to be an AMD right now, and like so like no one's thinking about General Mills, but like this is a stock that's been in the red way longer than it should have been. It's sitting at $35 a share. It's at freaking rock bottom when you look at its chart. Really, realistically, it's just-
2012 prices with far better financials and fundamentals.
right,
Make that
and a
make
stupid
sense?
dividend.
Yeah, like stupid dividend that's safe.
7% dividend is insane.
Now there's gonna be, pardon my French, some idiots that think that the dividend's at risk, but it's really not.
Yeah.
It's more than easily covered. Like I said, for the time being, I don't see any risk with this dividend.
No, and why would they cut it now at these lower levels?
It's just no. Well, they would just make the share price fall more.
Right.
They're
Yeah.
only gonna cut it if absolutely
really-
necessary,
Yeah.
and that's not necessary. Not necessary. You
No.
know, some people talk about their debt's a little high. That's a consumer staple. You'd be hard pressed not to find a consumer staple with eye-watering debt. That's just they have stable cash flows. They can get ridiculous interest rates, so they take out debt.
Yeah.
Verizon does the same thing.
Yeah.
Altria,
True.
which I made a lot of money on Altria.
True.
I have a 10% dividend yield pretty much forever on that stock. That's only growing because I bought it in 2022.
Yep.
So,
Yeah. No, I do like this stock. I wouldn't say maybe not as much as my United Healthcare pick, but I do like it a lot. That dividend is so. Oh man, that's so nice.
they do cereal, packaged foods, pet food. I mean,
Oh yeah, and that's big
and people nowadays, they'll feed their pet before they feed their kids.
too. Yeah.
So,
yeah, dude. That's a fact. That's a wise decision. Getting into like healthier pet foods and things, just getting into the pet food market in
Mhm.
general.
and
Yeah.
Blue Buffalo, one of their brands, is widely considered one of those better for your dog brands.
Yeah.
So it's
Yeah,
considered
true.
a luxury brand,
Yeah.
kind of for dog food. It's
True.
always considered that more natural.
True.
But-
I think General Mills has tried to expand into like healthier like people food too, right?
Yep, they've worked on it. Part of it was some FDA stuff that RFK did with artificial food dyes, but sometimes you need the regulatory arm of the government to kind of push some of that along.
Yeah. True.
Yellow number 5, which is a petroleum byproduct, probably shouldn't be going
Mm.
into your stomach,
Probably not.
even if it tastes really freaking good.
Yeah.
Sugary, sweet petroleum, but I mean, stuff needs to be changed with regulations sometimes, and doesn't mean the company is bad. It's just they were operating in the environment they were given,
Yeah.
and now they have a new environment, so they're going to change.
Yeah. Yeah, a lot of
So-
times it's on you, the voter, with the government to sometimes force change, obviously, which they will. So, and that's something I think, you're going to see going forward here as things like turn around for them and they get things, but in a better situation that they want going forward.
Well, yeah.
So,
And if you're looking from a pure discounted cash flow analysis, run of the mill, baseline, industry average, nothing. I'm not going to really go into my conservative metrics for this one. I'll just say what the industry standard valuation would be for a DCF. I mean, you're looking at the upper 40s. It's trading at 35.
yeah.
There's some meat on the bones there,
Oh, yeah, for sure.
It might take a little bit, but I think this is one of those stocks you want it to take a little bit. Because this is like you're putting money into like an HSA almost.
Yeah.
You're getting a 7% return on your money with equity growth. So it's better than an HSA. It's like an HSA, but on steroids.
Yeah.
Because you're getting equity growth plus a dividend that is higher than, not HSA, high yield savings account, HISA,
Right.
sorry. It's like a HISA. You're getting amazing equity growth potential with stupid dividend returns. What high yield savings account do you have or know of that pays 7% in the current rate environment?
Not right now.
I don't
For
know
sure.
one. My high yield savings account pays 3.5.
I was gonna
right
say my regular settlement fund makes 3.5. But that's it. You might get some that are like 4 or 4.5.
and special introductory rates of 5%, but you're not going to see 7% anytime soon unless rates go up. So
I don't think they project rates going up. Right?
They're flat to down. I mean, depends on what inflation looks like next quarter, I think.
Yeah, it's true.
Or next month.
They're playing it year by year.
Well, yeah.
Yeah.
With inflation print being insanely higher than what it really should have been, you're not gonna have. The Fed doesn't have much wiggle room right now to cut rates, despite what the narrative is. Unless you want to really fan those flames of inflation.
Yeah.
I mean, it's very evident that interest rates are a direct contributor to how inflation runs. So.
Right. I mean, you cut interest rates, inflation tends to go up. So.
Yeah, because people could take on more debt.
Right.
Stimulate the economy more.
So.
Creates money.
So for right now's market, yeah, I mean, 7% dividend.
Yeah, just as being paid to wait with a relatively stable stock that doesn't move a lot.
And all your like traditional traditions and learning about the stock market, they'd always say expect 7%, return a year. Expect 7%. It's like this stock is like
7 to 10, but
yeah, we'll give you 7% guaranteed, and then whatever equity growth after.
Plus, we'll grow it at 2% a year.
Yeah, true.
No.
Yeah.
Which isn't quite beating out inflation right now, but
no.
When in a normal environment, a 2% increase in your dividend per year should be substantial enough to keep up with inflation on average.
Right.
Just it's been a kind of a weird 5-6 years post-COVID.
Yeah.
So
yeah,
a lot of that had to do with stimulus spending.
You're true.
But still, 7% don't really matter. You're getting 7%.
Yep. And you will get equity growth at some point.
At some point. Yeah. It's
rebound.
$48 stock with DCF analysis as an industry standard view. Personally, from my just gut intuition, $60 a share, roughly. I mean, that's more than doable within the next 1 to 3 years.
Yeah.
Everything given earnings and if they can stabilize volumes like they probably will be able to do.
Right.
Yeah. It depends how long it takes for them to stabilize volumes.
Yeah.
Because that's their main issue is their shipping volumes and their sales volumes, which, consumers stretched thin right now. A lot of people are trading down. People are looking at, do I want Bounty paper towels or Great Value? They're doing the same thing with cereal.
Right.
Granted, in my personal opinion, I think private label cereal tastes kind of gross and doesn't have quite the same flavor and texture as General Mills or Post or Kellogg's, but maybe I'm just spoiled. I don't know.
Things vary. That's why you got like 5,000 boxes of cereal in the cereal aisle. A lot of competition there for sure. But overall, yeah, I think it'll be a good company going forward, for sure. And one that we are definitely eyeing up, ain't that right? We've been doing that for a couple months, so.
I've got 125 shares, and I'm pretty comfortable with owning 300, so not really quite there.
All right. Well, we're going to be aiming to enlarge our positions, that's for sure. But anyway, guys, leave a comment down below what you guys think. Would you buy into the stock? Like all that good stuff. And we'll see you on the next one.
And, give your thoughts on what you think of these stock style videos. Do you want more of these, or do you want more of the other geopolitical talks that we do as well with like macroeconomics or stuff like that?
Anything in today's market. We are willing to talk about any of it.
Thanks again for having me.
Yes, always. It's always a pleasure. And have a good one, guys.